What did you make of the numbers today?
Hey, Carolyn, thanks for having me on the show. I've been covering the company for the better part of 5 years now, and I've been joined with a very passionate retail investor base. And there was something that retail saw in this stock when it was trading in the single digits that Wall Street did not see. Obviously, we've seen what has happened since then, and now Wall Street is buying it at a higher premium, but maybe that's because it deserves a higher premium. I mean, you're talking about a company that just did 39% year-over-year revenue growth, 71% U.S. commercial growth. The remaining deal value is up 127%. Their U.S. government business is now accelerating to 45% year-over-year growth. It's a company doing $900 million in revenue, nearly $900 million, with less than 800 customers. I know the valuation's aggressive here, but I think the growth is starting to warrant it.
Just to double click on the market capitalization of $255 billion. Look, the stock had run, excessively this year, many would say, more than 60% higher. No wonder we pull back a little bit. But I'm interested in your take, perhaps from some of the analysts out there. Jeffrey's saying, look, this is really a retail trade. I'm not hearing people talking about Palantir in the institutional market in any way the same amount that we're hearing in the retail community. Is that retail resilience there?
Well, if you look at the institutional and retail ownership split, it's 50-50. So this is not Tesla in 2019 where it was 70-30. I think there's a 50-50 split. So there's obviously institutional investors that are excited about the name. But in terms of the valuation, let's take a second and step back. OpenAI is worth $300 billion on the private markets, and they're not even profitable. AIG said this a month ago at their investor day, and Palantir quoted this in their slide deck in their earnings yesterday. AIG expects the adoption of an AI-powered underwriting solution leveraging AIP, Palantir's core software offering, to double its 5-year revenue CAGR from 10% to 20%. Alex Karp, the CEO of the company, has been saying that large language models largely are becoming commoditized. The implementation of them is what matters. I'm not saying the stock is cheap. I'm saying the aggressive obviously is, the multiple is aggressive, but it might be warranted because the implementation of AI is what really matters, and Palantir is delivering those results.
I suppose some area of concern is Europe and indeed international expansion. That's going to be the catalyst that maybe does start to have people going, oh yeah, it should be worth 56 times its 2026 revenue. When are we going to get that international edge in the same way that they've dominated the US?
Well, Alex Karp has said this many times, and he said this on the earnings call yesterday. Europe is in a crisis. They are not going to survive. At least their biggest companies in the world are not going to survive unless they embrace the AI revolution. We are seeing U.S. commercial CAGR at 71% for Palantir. That is because the United States is embracing the AI revolution. Alex Karp also said yesterday that governments across the world outside of Europe are starting to increase their, at least, inquisition of Palantir software offerings as well. Palantir recently just signed a massive NATO contract for their Maven platform. I think that we are going to start to see a growth spurt, an S-curve in Europe. It might take some time because there are still cultural differences, but eventually I think that's going to come through. And when that does come through, I think that's going to be another catalyst for Palantir.
Ultimately, we've already seen resilience shown with US government contracts in the face of Doge. But is there anything that gives you any skepticism about perhaps a pullback in spending from that side?
Not really. I mean, look, it was funny in February when there was a Pentagon headline that said the Pentagon's going to be cutting defense spending, and as a result, Palantir was down 10%. I think more realistically, if the government is going to become more efficient with their spend, you need to efficiently allocate that spend. I mean, this is one of the most logical things that Karp and Shyam Sankar, the CTO, have been talking about for a while. And so if we need a better allocation of capital to get more transformative results, I would imagine Doge would be a massive tailwind for Palantir versus a headwind. And as a result, I think that's why it's commanding its premium. In terms of the stock being down 15% right now, this is a stock that was up 70% from the lows in April. It's a stock that is up well above 10x from the lows of 2022, when the majority of people like myself actually took a chance on Alex Karp when Wall Street decided that he was crazy. So from that perspective, stocks go up and down. I think this is a reaction to numbers that maybe weren't as good as what the street wanted, but the quarter itself was phenomenal in terms of the actual business growth.
They beat, they raised for the full year as well. And you're right, the stock is still up more than 42% over the course of the year. It's still basically the best performing tech stock throughout what has been a pretty, shall we say, volatile state of trade. Is, from your perspective, going more broadly, this the name that the retail community still wants to be number one? Where else has retail been starting to put their bets when it comes to a tech ecosystem?
Yeah, I think it's Palantir. I think Alex Karp, when he speaks, people listen. I did philosophy and debate when I was in high school, and I was a nationally competitive debater. I was one of the top 3 speakers in Europe, top 7 debaters in the United States. When I discovered Palantir back in 2021, and I saw on their website that they refer to their data infrastructure as an ontology. And ontology is a philosophical word. Dr. Karp has a PhD in philosophy. Dr. Karp wrote a book called The Technological Republic. It was a #1 Times New York bestseller. When you talk about retail and what captures their interest, what captured my interest was this guy who did not care what anyone said. He was going to be himself. He was going to say his political beliefs regardless of what happened to the company. He had a backbone, is what I'm trying to say. And I think because Palantir has a backbone, I think because Alex Karp is ruthless about explaining what that mission is, that's why retail is attracted to the name, and the growth is there to justify why retail wants to bet on a tech stock that is actually accelerating in the age of AI.
Does retail want to bet on anything right now in this economic environment? What's the sentiment like more broadly, Amit?
Well, if you look at some of the JP Morgan data we got in April and March had $40 billion of net inflows from retail. April had about $42 billion of net inflows from retail. Hedge funds actually took down their positioning to the Max 7, the lowest since 2023. And hedge funds, a global data of 3,000 hedge funds showed that their short positioning on the broader S&P is at 2022 levels. So this is going to be a game of if retail is right on buying the dip and the tariff volatility is going to die down, which will allow valuations to become more mature, or if the hedge funds are going to be right. So far, we've recovered everything from the April lows. I mean, I could imagine hedge funds saying, oh, we missed it, we got to get back in, and that creates even more FOMO and momentum. But retail's been buying the dip, and I think they will continue to buy the dip, especially on Palantir.